Man, oh man, what a day, what a day. Well, we're back to work tonight, guys. Hope you made some money out there today on those beautiful bear traps. A couple of them here for us here today. But it's time to get back to work. We're only as good as our next trading day. So it's back to work Tuesday evening. We're getting ready for Wednesday. We got some more big news, and we got some really big opportunities to keep the winning trades coming this week. You know me. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed the video tonight, I appreciate you guys tuning in. If you like my stuff, hit that like button. Give me a shout out in the comments section below. Always appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro. Wednesday is not going to trade itself. We're on a roll this week so far. Let's keep this party going into Wednesday. So where are the best trades that we're setting up for Hump Day, Wednesday's trading session? Well, you'll notice right now, everything's pretty bullish, right? S&P's bullish, Nasdaq bullish, oil maybe more on the bear side right now. I'll tell you, we're looking for some nice rotations running higher. So I definitely have some breakouts, maybe some bear trap breakouts on the S&P and the Nasdaq. We're watching as the buyers sort of finish off those pendulum swings. But I'll tell you though, I've got some reversals on my radar for tomorrow. I'd love to see some big, deep pullbacks, some bear trap reversals here as well. So we'll talk about some breakouts. We'll definitely talk about some reversals, and we'll talk about if the bears can wrestle this away from the buyers tomorrow, how to trade a bearish reversal as well. Oil is a lot more bearish in the short term than the S&P and the Nasdaq. Again, we do look for those bull breakouts, bull rotation going higher, but I love to get some bear trap breakouts, some bear trap reversals off of that low as well. Say that 10 times fast. Anyway, so lots of great trades we're tracking. And again, I'm going to go over all my favorite entry patterns, entry setups in this video tonight. That way you've got a game plan to make some moolah on Wednesday. Now, speaking of Wednesday, let's not get too far ahead of ourselves. We do have another big block of news tomorrow at 8:30. We get the retail sales number at 8:30 Eastern time. That is pretty much going to be the big news we want to be watching for tomorrow. 8:30 news, just we saw that CPI number that will get us going tomorrow morning in our trade room. We also, of course, have that weekly inventory report for oil traders. And keep in mind, speaking of oil, we are watching rollover tomorrow. We'll talk about that a bit later on in the video. Those are the two big market catalyst for us here tomorrow, 8:30, 10:30. Hopefully we get some more nice juicy volatility off that 8:30 news tomorrow morning, because of course we saw how well it set up for us here for this morning. We're not done this major news tomorrow though. We got some more. We got PPI coming on Thursday, and of course OPEX coming on Friday. So we're not done with major news tomorrow, but keep that on your radar. 8:30 retail sales, 10:30 if you're an oil trader, and we'll talk more about the oil report as we go deeper into this. Back to our charts though here tonight, because after all, right, the news is good for a catalyst, but the money is made, right? The money is made on the charts. Now guys, if you like making money, if you like growing your account quickly, I would definitely recommend watching this video all the way through to the end tonight, because I'm going to go over each one of these charts, and the trades that I talk about on the S&P can be applied to the Nasdaq. Trades I talk about on the Nasdaq can be applied to the oil. The oil can be applied to the S&P. It will all blend together tonight. I'm going to build off each one of these charts. So don't go skipping out on me after your favorite market, right? Don't cut yourself short. I'm going to make it worth your while to stick around all the way to the end. We'll go S&P first, Nasdaq second. We'll wrap things up here on the crude oil to finish up the video here for tonight. First things first here, guys. These are all tick charts. You can see tick charts in the upper left-hand corner. This is a 10,000 tick chart. All the time frames in the upper left-hand corner. Be aware too, that is the 21 EMA. The exponential moving average is on all of these charts. And as always, I know you guys love them so much. I've got some very interesting updated 1 hour time frames, 60-minute charts with the most recent price action, recent analysis on the bigger picture charts. I've got those included, the description of the YouTube video. Those will be a great companion to go along with the analysis that's right in front of me here tonight. So if you want to see a bigger picture and see kind of where the lens I'm looking at these through, you can definitely grab those links in the description to find those bigger picture, higher time frame charts already. All right, so now that you know more about what you're looking at and kind of how to get more information in the description, now what's the most important factor we have right now on the S&P? Well, for the most part, the S&P and the Nasdaq, everything really is very bullish overall. We may not be looking very bullish in the short term right now, and you can definitely see there's a range right in the middle. And kind of the most important thing is we're bullish, but you'll notice that the buyers they're buying the dips. They're definitely buying the dips. And we talked about bear traps in last night's video. We kind of expected that here today. And you'll notice though, right, we should be rotating back higher, right? The amount we go below the range will usually be about the amount we go above the range. So you have to think there's a big bullseye right up on that high right now, but it's pretty obvious. I mean, you can see for yourself, right? We're going lower lows. We got lower highs. We got this bear channel down here. So, all right. So knowing that the buyers are trying to rotate back higher and take out those highs, but at the same time, it's quite obvious that the buyers are buying the dips and we get an overall bull bias. My two favorite trades for tomorrow is definitely going to be a bear trap breakout on the way up to retest the high, right? So bear trap breakout up to retest that high. That's one of my favorites, and we'll talk more about this in a moment. We're going to go into a lot more detail about breakouts going higher. But one of my favorite trades, bear trap breakout. I think my favorite trade for tomorrow, and we'll see if we can get lucky on this, is another bear trap reversal, taking out some of these lows off the channel low, off of this big measured move area down here. So you got to imagine more buyers are waiting down here to pop this thing back up into this trading range. So let's break this stuff down. Now I'm going to go over the move going higher here in a moment, but let's talk about if we get this move going lower, and really how to buy those reversals. Now, most important thing right now is that if we do end up rolling over, it's going to be relatively bearish. So we have to keep kind of picking up where we left off in last night's video, where as we roll lower, we're looking to, again, because we have so much bearish momentum in the short term, we want to try to get the bears trapped in and use their stops as fuel. So a few different ways you can do this is we're going to use the 2-try rule and wait for the bears to try to short into some of these lows. Now, you can't see it very well on this slower time frame. This is a 10,000 tick chart. But if you were in the trading this morning, right, if you're on a faster time frame, you can see there was a lot of opportunities to trap in the bears as they sold into those lows. So once those bears try a couple times, think about where their stops are. And the reason why I need to use stops as fuel in this situation is because of the overall, well, not overall, but short-term, right, bear momentum and the obvious lack of rotation going higher. Remember, still an overall bull market, right? Look at that 60-minute time frame I have linked up in the description, and you'll see it's tough to call this a bear market. So we'll take the lows out, trap in those bears, and use those stops as fuel. Now, one more variation of this. Sometimes what happens is the market will puke and run lower. All of that momentum now will carry us up and retest the low. Okay, this happens, right? Sometimes they'll puke, run lower, retest, and then we can go back up in the range. So if we do get a real strong move down, don't be surprised if it pulls back to that 21 moving average, retest the low, and then we always say, what? Mission accomplished. Same thing now, right? Try to trap those bears in. Let them try once, let them try twice, use their stops as fuel. And just like we saw this morning in the trade room is that once we get those bears trapped in and we get that nice punch going higher here, where does the market want to go? It's going to want to go back up into that trading range. So now we can use that new channel, right? Mark off that high, mark off that low. And just like I teach in our free trading course, you can look for things like bear traps off the low of that channel, seller failure patterns, right? Coming off that low as well. So think about this as we go lower. Either we take out that low and use a failure pattern, right? Just we talk about in the free trading course, a failure pattern, or if they happen to roll it over and retest that low, Then we look for the same thing, right? Trapping those bears, just as we saw today, right? Trap those bears in, use those stops as fuel. And then again, as it pushes higher and we know where it's trying to go to, we now go out and find that new channel. And again, just as we talk about in the free trading course, it could be a bear trap, it could be a seller failure pattern, it could be a pullback combo, and we kind of know where the objectives are now going back up into that trading range. I love that type of sequence. Another one you want to keep in mind is that V bottom. Let's say they take out that low and there's so many buyers down here that we simply don't get a 1-2 back up, and the market basically just crushes it right back up and begins to grind going higher. These do happen a lot in these range bound markets. We may not get that signal, we may not get it. It's kind of one of the disappointing parts about ranges is that sometimes they will just V bottom right off of those lows. So if you don't get it, don't force it. Just simply wait for that new channel, that new trend line off the high. Find that new channel and then repeat after me. First test. Yes, first test is the best test. I want that long, off of the low of that channel. And again, bear trap, like this example, seller failure, pullback combo, strength move on the way back to take out the top of the range and to leave that runner all the way back up. So keep that in mind too. And again, these are all the same entry patterns I'm talking about here that you learn in that free trading course, which reminds me, by the way, I know that most of you guys are taking the free class or you've taken the free course already. By the way, I love getting all those emails of your winning trade snapshots. So I know most of you guys are learning the setups. You're making money with them right now. But if you're watching for the first time right now, if you haven't taken the free trading course yet, I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy that you'll learn in that free video series will teach you a stupidly simple trick. Within the first 5 minutes each day, you'll know exactly where the best winning trades will be. And I'll help you start making money on your own account by teaching you 4 different entry patterns, my favorite entry patterns. It's all part of that free trading course. If you're tired of missing the best trades each day, if you're sick of taking losses, definitely grab that link, take the free course. It's perfect for someone trying to make the jump into full-time trading, and you'll learn a lot about trapping in bears, stops as fuel, using ranges, etc., etc. Now, I do want to talk more about the price going higher here. I do want to talk more about that in a moment, but before we do that, though, what would cause me to be a seller down here? We really would have, we'd have to see this breakout going lower. They'd have to hold a pullback, and they'd really have to jump very strong. We saw a good example today, right? Middle of the morning this morning, where it dumps down, very strong move down. But you'll notice, right, they couldn't get much more than that. The bears struggle and poop right back up, right into that trading range. So the only real way I can be a seller down here, because again, we're still an overall bull bias. The only way I can sell this thing as it goes lower, or if it goes lower, is if they pull back to that 21 moving average and they really have to crush this thing and run this thing lower. Now, keep in mind, there's a lot of support down here. There's a lot of support. So we really got to be careful in this area down here. It would make a lot of sense. Take out some of these lows, trap in these bears, and whoop right back up again. So be very careful if we do end up running lower, pulling back, again, jumping off of that low. What I can do is I can find that new channel. Remember, it has to be a very strong, very convincing jump off that moving average. Not like that, right? It has to really push. And then what we can do is find that channel and then grab that first test off the high of that channel. Okay, we call these 1, 2, 3 breakouts, right? 1 is the breakdown, 2 is the pull back to the moving average, 3 is that strong jump. Again, has to be very, very strong, because it has to be enough momentum to give the bears a shot to short that top, right? That bull trap top, that buyer failure top, right? So just be careful. And I wouldn't be surprised at all if it goes back and retests that low, get some scalps off the high of that channel. Moving average course comes down now, and then what happens next, right? 1, 2, and then back up right into that range here. So be very careful down here. There's a lot of support, and again, you'll see on the higher time frame charts down in the description, you'll see that there's a lot of support down there for these buyers to use. So be aware of that as we go lower. I love those reversals back higher for tomorrow. Now, what if we go higher here? Right? There definitely is some ways to make money on this going higher because, of course, the S&P has plenty of space to go here, and they're trying to finish off this rotation. Why don't we talk about that, though, on the Nasdaq? The Nasdaq is a very interesting chart here tonight. You'll notice it's quite different than the S&P. The S&P has this kind of bearish tone to it right now, and you can kind of easily see right now on this Nasdaq, we're very much the most important thing right now is it's a bull market into a trading range, and we're basically rotating back and forth. The S&P, the buyers on the S&P have some envy right now of the buyers in the Nasdaq, because the Nasdaq, you'll notice the Nasdaq has already completed that pendulum swing. By the way, whenever the Nasdaq has a lot more volatility than the S&P. We don't talk about correlations very much on this video because it can be a bit of it can be a bit overwhelming and a little too complicated for new traders. But when the Nasdaq reaches its objective, oftentimes, for example, the Nasdaq may go lower and it acts as almost like a synthetic level of resistance on the S&P. So the fact the Nasdaq has retested its highs up here, right, or it's retested its pendulum swing, is definitely another clue here that we may be in store. Again, you'll notice the S&P is a ways off, right? So if the Nasdaq finishes its rotation first, it oftentimes, out of sympathy, will drag the S&P down as well. And again, we're still looking for that reversal, but I thought that was kind of interesting there on the S&P tonight. Again, I don't talk about correlations very much because it can be a bit complicated, and really, in all reality, you don't need the correlations. I just found this one to be quite interesting. So on the Nasdaq right now, the one difference I would say about the Nasdaq is the Nasdaq has this beautiful bull channel coming up here. This is the one kind of big difference I would say between besides the fact that the Nasdaq's already completed its rotation higher. But I'll tell you though, there could be a beautiful bear trap reversal off the low of this channel. We see these quite a bit because, again, we're an overall bull market. We're into that trading range. We're rotating off the lows. A lot of momentum already at the back for the buyers. Now, I don't like the idea of buying way up here, right? I don't want to buy high. I want to buy low. And I'd really like the idea if we can get a trap, right? Remember, traps, we talk a lot about traps in the free trading course. The most important thing in here is we have to expect the bears. What? The bears want to rotate back down to that low, right? Because that's what ranges do. They rotate back and forth. So remember, the odds are still pretty good. We rotate all the way back down and then pick up those bear trap reversals off the low there. So we have to kind of anticipate that. But I'll tell you, if the bears run into some sticky situation, right? If they struggle, if they're trying to run this thing lower, think about how we can use their stops now, right, as some fuel on this little bear trap off that channel. And again, I do like the actual trap setup. We talk a lot about trapping the bears, and I like the actual trap setup, like you guys learn in the free trading course on this, just because you're worried about buying high. But this could be a little hidden opportunity there for the Nasdaq buyers and may turn into a nice punch higher on the S&P as well. That is definitely one kind of big difference, I would say, or big or different opportunity you can find on the Nasdaq right now. So I talked earlier about bull breakouts, right? Or bear trap breakouts, as we call it. Now, when you go in the description and you grab that 60-minute time frame, you'll see right away the big bull objective is at 12,949 and 3/4. We'll call it 12,950. So we definitely know where the buyers want to go if they can crack free of this overhead resistance. What you'll also see on the 60-minute time frame is resistance. Lots of levels overhead, and because of that, we have to assume that as we go higher, there could be more bears up there there coming in. I'm not too keen on selling those highs right now because, again, we're overall a bull bias. I like to filter my trades. It gives me more confidence. It keeps it simpler, and you get a better chance of making a big paycheck when you go with the overall directional bias. So, as I mentioned earlier, my favorite trade going higher, knowing where the buyers want to go and knowing there's probably a lot of bears up there still trying to pick those darn tops, bear traps, right? That's exactly what we're looking for as we go higher. So a couple things you want to think about, and this could also apply to the S&P as well. If we do get a nice punch going higher, this is where that bear trap breakout comes in handy. Strong pop up, shallow pullback, higher high in price. Okay? Say it with me. Strong pop, shallow pullback. This is the key. The shallow pullback drives all the FOMO traders nuts. The higher high is what basically means it's not just a V top, right? Back into that trading range, right? Because again, that range is a magnet, right? So we got to be careful again as we go higher. Strong move, shallow pullback, higher high in price, traps, baby. Traps, baby. These are our favorites whenever we get some, remember, bull market, right? Bull market. Bull momentum. We can take these types of trades when we go with the old momentum. We can't take these trades going against the overall momentum, right? So keep that in mind if you're trying to short something like that down here, right? We don't do that down here because we're overall bullish, right? We trap the bears in down here and eat their lunch, right? That's what we do down the bottoms there. Anyways, that's what to keep in mind here. Pop and grind, right? Pop up, we grind. The longer this thing keeps on grinding, right? The longer it grinds, and again, this also applies to the S&P, the longer it grinds up here, the more attractive that channel comes in, right? Now, remember, the best money, the easiest money you'll make in a pop and grind channel is to go out and find those swings, right? Because that's where traps live. Get underneath those swings, for in this case, a trap low or a bear trap. Get underneath the 21 moving average. Now, remember, trap the bears in underneath the moving average. Every time we get underneath the EMA, look for those bears to come in, get stuck, and use their stops as fuel. That's a failure pattern. As you go back above the moving average, here comes your pullback combination. All right? Now remember, whenever we have these pop and grind channels, remember what I always say. First leg, right? Third leg, that will give you a good idea of where the big target is. Okay, first leg, third leg. Trends love to move in three legs. The first leg, this one right here, right? That'd be your first leg in this scenario. That's the first leg. The third leg is once we know the pullback, right? Once we know how deep that pullback is, then we can anchor it, and that will tell you kind of where a good target is. Wouldn't be a bad idea if you can to leave a bit of a runner on that right up to that high up there. But first leg, third leg is always an easy one there as well. We may also, let's say something like this happens where we pop up, we pull back to the moving average, and we just jump, right? We jump off that moving average. We're not getting it yet. We're not getting that separation. But if this thing pops up, takes out that high, the buyers come in and go, no, we're not done. We're taking out that big 60-minute high, and they rip off the moving average. Now my job is pretty simple. Mark that trend line, mark that low, right? And then again, drill down and find the entry off the low of it. Now, a common question that I get is how do you know the difference between that setup and the one I described before? The one I showed before is a slow grind, right? It's a slow grind, right? It'll be slow, right? And that's how you know it's a pop and grind. But again, if we pull back, take out one of these highs, we pull back to the moving average, and this thing blasts and separates off the 21 EMA. We'll talk more about separation tomorrow in the trade room. But the minute it separates away from that moving average, again, we're not getting it yet, but if it does escalate, then we go out, we find that new smaller channel, because when it separates off the moving average like that, that tells you the momentum is very strong, and strong momentum tells you don't miss that first test off of that low, right? Hopefully that makes sense there as we're going higher. So three ways, and again, both in the S&P and the Nasdaq to be a buyer here. How would I sell this thing as it goes higher? What do you think? We're overall bullish, right? We're overall bullish. So I got to be careful, right? Because yeah, I'm with you. There's a lot of resistance overhead. I'm with you, but we don't want to make it a habit of selling at resistance in a bull market, right? I'd much rather buy at support in a bull market. So the best way to short something in a bull market with a range like this is to wait for a double top. Okay, now don't get me wrong, right? We might go up and crash right back down again. And what I always tell my students is, even a 30% winning trade will still work 30% of the time. Even a broken clock is right twice a day. So yeah, we might take the high out and rip right back down again. But guys, get in the habit or get used to the fact that you might miss some of these reversals. The only problem is if you took every single one of those and shorted that high, again, even a 30% winner, you're still going to see 30 out of 100 are going to work. So you have to be okay with letting the market make these big moves without you. They're not high enough percentages. We need to build our career, build our accounts, right? Make our money on more reliable trades. So the best way to do this, knowing this situation, right, is very bullish right now, is that as we go higher, looking for that pullback, that retest. Once they retest the high, remember, buyers are going to try to buy these pullbacks off that channel, right? Once they retest the high, then we have to be looking for, do buyers now come in, 1, 2, and then look to use their stops. Remember, stops as fuel, especially in a situation like this, because you have no momentum at your back, right? Momentum is all bullish in this scenario, right? It's all bullish, and these things love to keep on going, right? So again, not my favorite trade for tomorrow, but if you want to pick some tops up here, right? Want to pick some tops up here as we go up, pull back, retest. Again, there'll be channels here, right? Like I mentioned, but once they retest those highs, get that moving average coming over. Professionals are buying low. This is our chance now to rope in some rookies once, twice, and again, we use the 2-try rule because we want as many stops to really lick, right? We want to hit as many stops there as possible. And we have to give those buyers the benefit of the doubt. They're going to keep it going. And once we start seeing signs of exhaustion, then we can look for that short, right, back down into that trading range, right? So hopefully that makes sense, right? Get used to the idea that going against momentum, you're going to miss some trades every once in a while, okay? But you'll survive longer in the business. Half the battle is simply knowing which trades are worth fighting over and which trades are not. So that's the game plan for the short off the high. What do you think, by the way, right? What do you think? I'd love to hear your opinion. I'd love to hear feedback. Maybe give me some different chart examples in the description or in the comment section. Always appreciate you guys sharing your opinion and give me some feedback in the comments. How about some oil? So wrapping things up tonight on the oil, first of all, 2 things for tomorrow. One, we do have rollover on our radar right now. Usually oil rolls over on the 18th of each month. Tomorrow, of course, is the 15th, but all the charts right now are telling us we may have rollover for tomorrow. This is the 323 contract. Keep an eye on the volume on the 423 contract tomorrow morning. The minute the volume is higher on the 423 contract, higher than the 323 contract, then you know it's time to make the rollover, right? We're not talking about expiration. That's a few weeks away. Second thing is we have that big oil report tomorrow at 10:30 Eastern time. So the window of opportunity is quite a bit smaller on oil. In fact, I always tell my students, get to your trades as early as you can on Wednesdays because you got the oil report at 10:30. With that said, we're in overall bull market. You'll see in the description of the YouTube video tonight, that 60-minute time frame, quite bullish on the oil right now. The most important thing right now is you can see that trading range and that strong move down. Now, why is it important? Well, first of all, ranges are magnets, right? The amount we go below the range is the amount we go above the range. We talked about this in last night's video. Okay, that range continues to be the most important, the second most important thing, right? The most important thing right now is the strength of that move down. Now, whenever we see a strong move down, we have to respect that momentum and anticipate a retest of that low, right? Makes sense? And so we know we're overall bullish. So kind of my two favorite trades for tomorrow on this is either to get a retest of that low, and this will sound very familiar because we've talked about this a couple times on the S&P, then trap in those bears, right? 1, 2, use their stops as fuel and get this thing to rip back up into that range. Take out that low, mission accomplished, as we say in our trade room, retest the low, and then once those rookies come in and start foolishly chasing the market lower, we can use their stops as fuel, again, because we are more bearish than bullish in this situation. Short-term again, right? Short-term momentum is very bearish, so we'll want to rope in those bears, use their stops to give us that catalyst going back up into that trading range. I like that idea on the oil. Another one that I wouldn't mind taking for tomorrow is knowing that strong move down, knowing they want to go lower. Oftentimes we'll see sellers try twice to get there. So they pull back, they try once. They pull back again. Notice this channel I have drawn on. Right? That channel, not a very reliable channel, right? Not with a range above us in an overall bull market, right? But hopefully the bears will come in and try one more time. And this is where we find what's called crown reversal patterns. Now, these are definitely attractive, and this could be one of the setups we get buying off the low on the S&P or the Nasdaq tomorrow. Okay, you'll notice on this one, remember, strong move down for the bears. They want to retest the low. Let those bears come in. They've already tried once. If we go higher, right, higher high, try a second time. And then if we can get a nice juicy, green candle closing above the moving average, you guys learn about these signal candles in the free trading course. That will be a crown reversal going higher here. All right, so keep an eye on those two as we go. If we rotate higher now, I'm not a big fan of shorting the top, right? Because again, we're overall bullish, and we know that whenever a market is range bound, and we saw this in the Nasdaq, whenever we have a bull market like this, into a range like this, they go lower, this momentum can really pick up steam, and it's going to want to obviously take the highs out, but more importantly, wants to punch up to complete that pendulum swing. So there's money to make on the way up to that pendulum swing. The problem, though, is we don't want to buy too high. This, of course, is where a bear trap breakout comes in handy, right? Strong move, shallow pullback. We get the wind at our back. Momentum is overall bullish. That's why we can take trades like this. We can be a little more aggressive in these areas. Remember, though, we're not simply buying that pullback. Strong move, shallow pullback, higher high in price, traps, baby, all the way up to that high. Okay, remember, we may end up taking out this high and coming right back down again and again. Those are tough, right? Because you're not going with momentum. It's very difficult to get a good, reliable short there unless you go up, double top, and then 1, 2, back down into that range, right? Or we pop up, we start grinding. That's great. The grind is a huge clue because now we can go out, mark a new channel off that high, off that low, and go looking for the first test off the low of that channel. These are really, really easy trades when you learn how to kind of look for them, right? Remember, the key is it pops up and it begins to grind, right? The grind is the giveaway. The grind tells you that sellers who are trying to short the top, yeah, they're struggling, right? That's what that grind tells you. And as soon as it pulls back, you'll see everybody will pile on there and buy that channel. And again, it could be a bear trap, like I'm showing you here, right? It could be easily underneath that 21 moving average. Get some sellers coming in, use their stops as fuel for a failure pattern. And again, that pendulum swing is a very good objective as we go higher. The buyers really, in all reality, the buyers would love to get up around that 83.62. So if they happen to get a strong pop-up, a pull back to the moving average, and a strong, remember, jump, right? Blast off that EMA, we call these 1, 2, 3 breakouts. We just talked about this on the Nasdaq chart. Mark that high, mark that low, find those prior swings. What I'll usually do in these situations is with breakouts is I'll go back and look at these prior levels, right, and try to use those prior levels as a breakout pullback area, right? Again, try to combine that off the low of a channel. Boy, really, really good setup there as well. Remember, though, we have to see that pop, right? That nice strong jump off that moving average, or it has to pop and grind going higher here. All right, guys. I like the way this chart looks here for tomorrow. I like oil. I really like that bear trap reversal off of that low. There's a lot of support down here, so be careful as we go lower. We mentioned this last night, right? There's lots of support down below this low here, right? So it wouldn't surprise us if they roll lower and then we get that reversal going back higher again because we have that overall bull bias. All right, guys. What do you think? I would love to know what your game plan is for tomorrow. Which one of these is your favorite trade? I'd love to hear from you down in the comment section below. Retail sales tomorrow at 8:30. And then again, we got PPI coming on Thursday. It's going to be a busy day tomorrow. It is going to be a busy week the rest of the week in our trade room. Now, don't forget, again, I'll put all the important links, all the membership links, all the free trading course links. I'll put that down the description of the YouTube video here tonight. If you have any questions or if you need any help getting into my free trading course or joining our morning trade room as a brand new member, don't be afraid to call the office. We're always here standing by. We have live chat on the website, and so it's always pretty easy to reach out and get some help if you need it. And as always, I love hearing from you guys in the comment section below. All right, guys, I'm going to wrap things up here for tonight. I'm going to rest my voice. It was a busy day, a great day, but a busy day. Get some rest. We'll see you guys tomorrow morning, 8 o'clock in the trade room. If not, you better not miss tomorrow night's video newsletter. As always, my name is Joseph. Be well. Be nice to each other. Get some rest tonight. We're still catching up after the big game. I'm still catching up after the big game on Sunday night. I'm out of here. Be well. Be nice to each other. And you better be here next time. Adios, amigos. Bye-bye for now.